What's going on, everybody? Welcome back. So I thought I'd talk about this one. I get a lot of questions saying to me, Rox, I took a trade, I got stopped out, and then the market went in my direction. And I have a little something that I always turn to when I'm taking my trades, making sure that I get into the best possible trading setups, always get the best evidence and the best confirmation to make sure that the probability of me winning that trade is going to be higher than me being stopped out or me losing that trade. Now, granted, I do take losses like everybody else, and it's just normal, but we're not going to go into that subject right now. We're going to be talking about how to get the best entries, finding those trades where we can find confirmed setups and have the highest probable opportunity of winning those trades. So we're going to take a look at UJ. Now, this is recent history, and what I want to identify first in this market is we can see the structure is down. The market's making structure higher highs, higher lows, failed to make a new higher high, and now we have a double top, push phase, exhaustion phase in the market. Now, we could be looking for trading opportunities in and around this level here, but I'm not going to be going into how we get into these entries. I'm going to be talking more about retest entries once we see the market shift in momentum. So looking at this chart, we're clearly looking for sells. We're just waiting for that momentum shift. Now, I have set it up specifically so that we can get that momentum shift, because this is not what we're going to be focusing on. So we can see the momentum shift, strong bearish candle to the downside. We have a break of the previous structural low and a nice area here to indicate that the bears are definitely in control of the market. Now, a lot of you might be looking to the left saying, well, are you not worried about this? Are you not looking at this as a support level? Are you not looking at this as a demand level? Honestly, guys, I don't trade support and resistance, and I don't trade demand, supply or demand. I'm just looking at the behavior of the market and trading structure, period. So whatever else is there to the left and is distracting you, just try to forget about it for this moment and let's focus on what I'm about to tell you. So once we scale down to our hourly time frame, we can see that the market is in a very nice strong push phase. We can see that the level of this market has been broken after a period of time. Now, how do I identify that this momentum shift is actually true and not fake? Well, we can clearly see here, the market created a level where it didn't break for 2 hours. There's lots of signs of bullish pressure here. And then immediately we had a strong break close below structure. How do we confirm this as a good break close below structure? Well, if we bring this back down to the previous structure level low, we can see the next hourly candle attempted to push up, failed, and now we continue to see bearish sentiment in the market. So now, once we go down to the 15-minute time frame, this is our entry time frame. We're going to be looking for the market to come back to in and around this level for sellable opportunities. Now, what most traders will do is they'll wait for the price action to come back, look for the earliest sign of an entry, which could be a pin bar, an engulfing candle, whatever it may be, and then they look to take the trade. So let's do that. Let's wait patiently. So the market's come back to this level completely fine. We're not worried now what happens on the 15-minute time frame in terms of being our entry time frame, because we know that this is the break close below structure. We know that this is a key level in the market where price is broken, and now we expect this level to hold strong. So we're just looking for the evidence that we need in order to take this trade. So we're now starting to build that up. We have a nice attempt to break above structure. We have a wick rejection and a strong bearish candle to the downside. So let's take this as our example for our trading opportunity and for what most will do in a situation like this. So we're always going to go for a 1-to-3. That's my favorite risk reward ratio, 1-to-3. And having a good risk reward ratio is very important, guys. This is what's going to keep you in this business alongside really good risk management. So here we have it, a 1-to-3 risk reward ratio. We had the break, we have a retest, or what looks like a retest. We have an attempt to break up, a fail to break up, and strong bearish candles to the downside. So let's take this trade. I'm not going to commentate all the way through it, but price is leaving this area. And then let's see what happens. Look here. We get stopped out. Now, this is a common occurrence that happens with a lot of traders. Can it be avoided? Disclaimer, not all the time. Is there a way of getting to higher probable trading setups that are out there? Absolutely. So let's take a look at this. Let's understand something. Let's clear everything that we have here. The market failed to break below the structure for a very long period of time. We finally broke below this structure. What usually happens in the market? Sometimes we have a breakout, then we have a break back into structure. And what we want to be doing is avoiding this happening. So as the market is pushing up into this level, how do we know at this time that this is the actual retest and that the market is not actually going to be breaking back into structure? Well, we don't know. You're looking for the wick rejections, you're looking for the bearish pressure. But still at this time, this hourly candle is still open, which means it still could push up as you're entering this candle. So how can we make sure that we identify the momentum shift and identify that this level is holding strong? Well, what we can simply do is understand the phase of this market. We have a push phase, we have an exhaustion phase back into that key level, and we have a continued push phase. Now, what has happened at this stage? Well, the market has created a level. It's showing signs that it's respecting a previous key level in the market and showing evidence that the bears are in control. But is evidence enough? Well, no, not really. What we want to see in this market structure is we want to see price come back into this area, and we want to see price confirming that it's a strong area. And how do we do that? Well, we simply allow the market to continue its phase in a downtrend, which is a push phase. We allow for the market to come back to that level. And then what do we have here? I talk about this pattern a lot. We have a double top pattern. Now, price attempting to break above this structure and failing is confirmation that the bears are clearly sitting in and around this area. So for whatever we see here, whether this is a stop hunt, manipulation, blah de blah de blah, the point is we can see confirmation. So how do we take this trade? Well, we're just simply waiting for the market to give us a close with a wick or some sort of bearish pressure to the downside to confirm that this behavior right now is still true. We don't want to go in straight away, because if we take the sell, what could happen? The market could still continue with this bullish pressure to the upside and continue up. So what we want to be doing is we want to wait for one more 15-minute candle, or if you're using the high time frames, 2 1-hour candles, or if you're using the 4H time frame, 2 4-hour candles. Because what you will notice most of the time is that price does not leave an area immediately with one candle. More often than not, you will see price sitting in that area for a period of time, showing signs of wick rejection, and then going in the direction that it wants. So if we only have one here now, we don't need to rush into this trade. We can clearly wait patiently for a second one to come, whether it be a pin bar or whether it be a strong engulfing candle to the downside. And now what can you see? Strong push phase market, a level being created, continued bearish momentum, confirmation of that bearish momentum, and now a clear setup for you to take this trade off of the back of bullish pressure with bearish pressure clearly evident in this market. So once we have this, we can take this trade with a stop loss above structure, very small stop loss here, only 8 pips. We'll go for our 1-to-3 risk reward ratio trade. As I say, I always go for 1-to-3, and then we can see what happens. Let's hit the play button. So the market starts to move in our direction. Whilst we're taking this trade, we're not expecting the market to break above this level. Why? Well, if this is a level created in the market, then what we're expecting the market to do is respect this level, not peak our high, but continue with that bearish momentum on the higher time frame analysis and continue down. And as you can clearly see from this example, we have a winning trade. Now, does this happen all of the time? Nope. Is there a high probable chance that this will happen often? 1000%. I can bet my life on it. And these double top and double bottom patterns are absolutely phenomenal in stopping you, taking a trade, getting stopped out, and then seeing the market go in your direction. And this applies to any which way you take a trade. If you decide that you want to take a head and shoulders pattern, you want to take a trade using Fibonacci's, you want to use harmonic patterns, it is always best to do a few things first. Wait for the momentum shift, allow for price to create a level in the market, then come back to that level to confirm that that level is strong, and then you can go down to your lower time frames if that's what you do, to look for your patterns of bullish or bearish pressure pushing into structure and failing, and then taking those trades. And it's not just about taking 1-to-3s. When you get down to your lower time frames, you could be taking advantage of much bigger moves in the market as well. And as you probably can see here, this now starts to move into like 1-to-6s, etc., etc. But this is very key that you understand this point. If you have evidence that the market is creating a level, respecting the level, showing signs of bearish or bullish pressure, be patient, wait for price to leave that level, come back to respect that level as confirmation, and then go in for the kill. So I really hope this was useful, and as I always say, please smash that like button, subscribe if you haven't already, and until next time, take care.